Good day. In this lecture, we are going to talk about factors of crisis, banking and currency crisis more specifically. So, first of all, let's try to understand what is a financial crisis. A financial crisis is a situation where we have a steep decline in value of some assets. Business and consumers are unable to pay their debt. Financial institutions, they experience liquidity shortage, and we have a bursting of a speculative financial bubble. We can have a stock market crash. We can also have a sovereign default. We can have a currency crisis. So financial crisis is something that can be limited to banks or can spread through a single economy or can spread to the economy of a region or can be a global crisis like the one we had in 2007, 2008, which started from a crisis in the US. We can have different types of financial crisis. We can have a currency crisis, which is a situation where fixed exchange rate regime collapse or a currency goes into a free fall, like it happened a few years ago in Turkey. So we can have a currency crisis is a situation where we have a rapid depreciation of a currency against other relevant currencies, like for instance dollars or euro. Other kind of crises we can have are an external debt crisis or a balance of payment crisis. This is the case when a country cannot attract capital and in order to finance current account deficit. We had a recent example of this in Mongolia, but we had many examples worldwide. So in this case, we typically have a strong imbalance in the balance of payment, and therefore, usually, this can create also a pressure on the currency of the country, which is experiencing this imbalance in the balance of payment. Then we can have a sovereign debt crisis, which occur when a government cannot afford to pay the interest on the existing debt. This is something which happened in Greece in 2010, 2011, but it happened in many other cases worldwide. It's quite common whenever the deficit of a government is too high, and therefore the government is no longer able to issue government bonds in order to finance the interest on existing debt. Then we have the banking crisis, which occurs when stability of banking system is low. This happens, for instance, in Italy at some point or in Cyprus a few years ago. So in this case, we have that a number of banks, especially large banks, important banks, are experiencing significant problems in terms of lack of capital, lack of liquidity, a big amount of non-performing loans, and so on. Or we can have another kind of crisis we can have is the household debt crisis, like for instance, the one we had in the UK or in the US. This typically occurs whenever households have too much debt. They have a significant amount of debt, and they are not all of them are able to repay them. Or we can have a broad financial crisis that combines many elements of the above crisis. This is the one we had, for instance, in 2001 in Argentina, where we had problems related to the balance of payments, to the currency, sovereign debt at the same time, and also bank crisis, of course. In this slide, we have some of the most relevant banking crises of the 21st century. We had, for instance, in 2002, a banking crisis in Uruguay as a consequence of the financial crisis in Argentina in December 2001. We have the banking crisis in Myanmar in 2003. we had the very important and very famous subprime mortgage crisis in the US in 2007, which generate the so-called Great Financial Crisis in 2008. In that year, as a consequence of the subprime mortgage crisis in the US, we had a banking crisis in the UK, in Belgium, in Russia, in many other countries. In 2009, we had also a Venezuelan banking crisis, and more recently, we had the banking sector crisis in Ghana. There are many there's a large number of banking crises occurred worldwide. As you can see from the graph, it's in the years between the end of Second World War till the 70s, we had a relatively quiet period, which is known as a Bretton Woods period, Bretton Woods era. After the collapse of the Bretton Woods system in the early 70s, as you can see, the number of crises occurred worldwide increased quite a lot. So this is something that economists sometimes highlight. The end of Bretton Woods era generate much more volatility in the economic and financial system. What are the causes of a banking crisis? Well, a banking crisis can be related to, can generate, or can be activated by a bank run. What is a bank run? A bank run is a situation in which a large number of depositors, they hear rumors about the stability of the bank, or they are scared that the bank will not be able to repay their money back, and therefore they run to the bank in order to withdraw their money. But a bank run is very, very dangerous event, because in case we have a bank run, what happens is that banks typically, they don't have enough liquidity in order to repay all the depositors, and therefore, or a large part of the depositors. So it happens that banks can become illiquid, and from illiquidity, they can become insolvent. So supervisory authorities, regulatory authorities, they try to prevent as much as possible bank run, because bank run can easily create the collapse of a bank and the collapse of the entire banking system. Also, bank crises can be generated by stock market positive feedback loops, which means that we can have a situation in which the problem of something which happens in the stock market can have a negative impact on the banking system. We can have bubbles in the stock market, we can have bubbles which snap and can create a bank crisis as well. We can have also issues related to regulatory failure or contagion. This is one of the simplest ways in which bank crisis can occur, is a lack of governmental oversight. So banks often leverage themselves to capture gains despite extremely high risk. Like, for instance, they can be over-dependent on derivatives. And therefore, this is another relevant driver in banking crisis. And obviously, banks they can be negatively affected by a large range of risk, like, for instance, credit risk, liquidity risk, interest rate risk. These kind of risks are relevant for a banking crisis, because in case, for instance, of credit risk, banks that have a large portion of their assets which are not performing, they can, at some point, they can collapse, they can default. If a bank has a large portion of a portfolio, large portion of loans that are not paid back, at some point the banks can collapse. The same happens for liquidity risk issues. I mean, in case a bank doesn't have enough liquidity in order to repay depositors, at some point the banks can bankrupt and collapse. And also another driver in the banking crisis is represented by the value of banks' asset. It can happen that the value of the asset can decrease for different reasons. Imagine, for instance, a bank which invested in some securities. The value of a security today is 100, tomorrow or next month, next year could be 90 or 80 or 70. In this case, a drop in the value of our bank's asset can generate the collapse of the bank. This can happen if we have a drop in the value of securities. This can happen if we have a drop in the quality of credits, in real estate, and so on. And also, another reason is related to the fact that we can be in the situation in which a bank has too many liabilities coming due, and the bank does not have enough cash. In this case, also the bank can collapse. And sometimes the crisis of one bank can be isolated, but in other cases, the crisis of a bank is likely to affect many other banks in the financial system. So we don't have a crisis of one single bank, but we can have a crisis of the entire banking system, like it happened in Argentina in 2001. A currency crisis is a situation in which we have an acute devaluation of a currency. And so let's try to see what are the reasons for a currency crisis. Well, sometimes we can have a currency crisis which is related to a pure devaluation, a pure speculation, which means that some economic agents, they believe that a certain currency is overvalued or undervalued, and therefore they start buying or selling that currency against other currencies, and they generate big fluctuations in the value of the currency. This can happen in the spot market, but this can also happen by using forward market. So forward market means that I buy today, I fix today the price at which I'm going to buy or sell a certain currency against another currency, and I'm going to deliver the currency at a future date, right? So this pure speculation can be one of the key driver for a currency crisis. Sometimes currency crisis can be also be influenced by central bank policies. Central banks may have a goal in terms of exchange rates, and therefore they want to keep the exchange rate in a certain range or at a certain value, but they don't have enough reserves in order to keep the exchange rate in this range, and therefore this can create also currency crisis. Or we can have a currency crisis related to significant events, like for instance the assassination of a country's leader, and this is something which rattles the market. Or we can have currency crisis related to wars, related to sanctions placed upon upon a nation by another. Or we can be in the case of an over-reliance on foreign investment and foreign debt. This is the case that is quite common case whenever a country is too much optimistic about the capability of attracting foreign investment, or about the capability of issuing government bonds in the foreign market. But then at some point, foreign markets are no longer interested in that country. Or another reason can be related to the over-reliance on one source of income for the economy, like for instance, oil. If a country is reliant on oil revenues, and at some point the oil price drops, probably the country can incur in a currency crisis. This is, for instance, what happened in the last few years in Nigeria, where the economy is over-reliant on oil revenues. And last, a reason for currency crisis can be related to market panics based on any of the above.